And then just to wrap up now, really wrap up. So I moved back to Brazil 2016. When I moved back here, I started two companies, a boutique investment banking company and a lending fintech. Both did really well. The lending fintech went through Series A, B, C, D. On Series D, SoftBank came in. I left the company and then I said, okay, now it's the time for me to focus 100% on Bitcoin. By then I was like completely orange pilled. And then I shifted my career to try to write more, talk more, research more, write more code, right, for Bitcoin and Bitcoin related projects. So it's a long way to give my background.
But it's super interesting, and I think it also kind of frames the most important perspective of you really nicely, with the Brazil background, with living through like the Merrill Lynch 2008 kind of crisis, living through also like giving you a lot of experience in the TradFi world. I heard you say in a podcast that you said Bitcoin creates, I think you said Bitcoin creates a new marketplace for savings, something like that. I don't know if it's 100% correct. Is kind of that the main thought that you have around the thing that you've learned through the Brazil experience, through the Maryland experience, of like where Bitcoin kind of is going?
Yeah. So let me see where I started. And there's a lot in that question. I actually saw that you were going to be talking, I think, in Prague about a similar topic, which is capital market, how this new concept of what capital markets are actually gonna be, right? And absolutely, I think a lot about two things when I look at the total addressable markets for Bitcoin, right? Two quick stories. One of them is when we look at Uber, right? When Uber really started going to market, and I remember actually seeing one of their first pitch decks, and this is online. You can actually Google it and find it. And on the first Uber pitch decks, they would have, like usually in pitch decks, you say, okay, here's our forecast, and to base your forecast, you have to say we're going to capture a part of the market, right? In the market, the total addressable market that they had at that time was taxis, right? They said, okay, we're gonna grab 20% of the taxi market, right? And Uber is going to be worth, I don't remember the numbers, but something like $1 billion, right? Because when we grab that market. What people didn't realize is that Uber not only did that, it captured that market, but it actually expanded the total addressable market, right? And when I think about Bitcoin, so that's the first story. The other one is Netflix. So Netflix did the same thing with Blockbuster. When Netflix started, right, everybody thought, well, they're going to be like the new Blockbuster, the same way that you rent movies, you're going to rent Netflix, right, at home. But people did understand that, the way that you were consuming content just completely changed. And you end up consuming much more content than you were. So the addressable market also expanded a ton, right? And it's also much easier for you to have, a device at home where you just click, log in, and watch a movie than having to walk somewhere. So the total addressable market also expanded substantially, right? So when we think about Bitcoin, and I wrote about this about 2 or 3 years ago, we should question what is the addressable market for Bitcoin, right? And when we think about valuation for Bitcoin, I think that's a very important question, right? Because a lot of people will tell you like, oh, Bitcoin doesn't have cash flows. How do you value it? I can't do a discounted cash flow model, which is true. And I don't think that's the right way to value Bitcoin. I think the right way to value Bitcoin is the same way that you would value assets like real estate, like gold, which they have two components, right? In the case of real estate, for example, you do have cash flows, but you have a second component, which is much bigger, which is the monetary premium that it carries, right? As I was saying, like in the 90s in Brazil, people would actually use real estate as a savings technology because we couldn't send money outside of Brazil, by the way. So markets were controlled. It was very hard to send capital to the US. So the asset that you had access locally was real estate. So with real estate, you could actually have something that long-term would protect your assets, right? So, and we see that up to today in different markets, right? So when you look at the price of a house, the price of the house that you're buying today, particularly in the US, right, where assets are massively monetized, part of it's the use case, but I would argue that more than 50% of the value, substantially more than 50% of the value, it's monetary premium. It's the fact that people are using that asset as a way to store long-term capital, right? Well, that's a massive market, right? 300 trillion or something like that in real estate, right? Gold is the same thing. The reason why you hold gold is because it is a savings technology. It is supposed to long term to hold value in very, very long periods of time, right? So the addressable market for me in Bitcoin, it's the monetary premium that it would capture from these different markets, which would eventually lead Bitcoin to be, I think, the best savings technology ever invented. And then finally, just to conclude, right, when you get to that point, I think people today don't understand, and I can tell you again, I think I like to use Brazil case because most people look at the US as a reference for the world, but most of the world is developing, most of the world is not extremely rich, right? And there is a market unfortunately, for despair today, right? Right. The market that grows the most in Brazil today is the betting market. So people bet on everything, right? So they will bet if you look at Brazilians, of course, love soccer. You can bet on anything on soccer games in Brazil. You can bet, when the first offside is going to happen, at what time, who's going to do it, right? It's crazy. And this is a market that is expanding, right? It begs the question, why is it expanding? And I think part of it is because, when you don't have a lot of, first of all, when your disposable income, right, after you spend everything is very little, and you're left with $10, $20 a month left after you pay all your bills, of course, you want to try to, 10x, 100x that, because, otherwise you're really not going to get anything out of that. But second, which I think it's more important, people lost the sense of savings on a long-term time frame, right? So if you look at if they don't know that they have access to a very good savings technology, that if they put some capital in every month, even if it's small, and if they look back in 3, 5, 10 years, they are going to have substantial capital that they could use, that they could retire from, right? And by the way, we've seen this with Bitcoiners, right? We've seen these in past cycles where people have saved money, and how many times, even the memes of Bitcoiners even sell their chairs, right? We become much less sensitive to because we know that everything is priced in Bitcoin. Bitcoin is this new store of value, right? And this is the point that, I bring. I think we haven't even realized, even if you don't think about the expanding of total addressable market, right? If you just think about the current addressable market for Bitcoin, is already massive. When you start to think about the new savings market that will be created, right? And how, by the way, much better for humanity, right? Because not being able to save the fruits of your labor into something, it's a real problem for the world. So the fact that you now can store the fruits of your labor, your work time, the hours you work into an asset that would actually have a possibility of, enduring long-term stability and value retention, and maybe even value appreciation, right? It's something that I think we really haven't priced in Bitcoin. And quite honestly, this is why I'm still extremely bullish. I think that even at current levels, right, you can put some numbers into it. If you look at some of these markets that I mentioned, gold, real estate, look at their total market cap, right? And even if you put probabilities, okay, let's assume, the real estate market, it's 300 trillion. Half of it's monetary premium. So that's 150 trillion of capital out there. There's just monetary premium, right? If Bitcoin captures this with a 10% chance, which I think there's much more than that, just in real estate, that would be a 15 trillion market cap for Bitcoin, right? So that gives you an idea of how mispriced I think these probabilities are. And thinking probabilities, I think, is the best way to think about pretty much anything, right? Absolutes are rarely correct.
I think real estate is such an interesting example because there's two things going on. There's like the Bitcoin trade going on, where Bitcoin is kind of sucking monetary premium out of real estate, which is like a natural thing. I've had probably like at this point 30 guests on my show that talked about how they sold most of their real estate for Bitcoin and why they did it and all of that. Like probably like even 50 guests or something like that from the 700 that I had on up until now. And then there's another thing going on, which I think Bitcoiners are not talking that much about. It's that the cost of real estate will go down drastically just of producing it. So if you think about AI and robotics, there's this fun advertisement was going on, like I think 2 years ago, where a construction company said, ChatGPT, build me that building. And it was like an ad for construction workers to find jobs there as a kind of like a funny joke, like ChatGPT cannot build my of building. But I think we are not that far away from robots that can do really nice building, 3D printing parts out and kind of constructing them on site, and kind of having a chat overview, having a chat interface where you can construct your own building, your own home, and then like robots coming and 3D printing this thing for you actually. And once there is no human labor involved in building real estate, the cost of building real estate will just drastically go down. I mean, that's the whole deflationary force. I think that's what Jeff Booth talks a lot of, like the deflationary force of technology in general. And this, I think real estate is the biggest example of how massive monetary value will completely shift from one asset to another asset, which is Bitcoin. And I think real estate is such an interesting example because it's so much, like it's what 370 trillion US dollars saved in there. I know Bitcoiners talk a lot about gold, but the gold is like what 20-30 trillion, and I don't think gold will lose as much as real estate will lose. So I think real estate is actually, for me, a more interesting example of how Bitcoin will revolutionize the whole asset class.
I agree, and I think there is two points to that. One, much better for humanity also that we're not pricing people out of real estate because they can't afford it, right? Because it became this monetary asset, and then a lot of, particularly the young people, can't afford real estate. That's a very bad outcome of the monetization for the world, right? For humanity in general, of the monetization of an asset that should not be monetized, right? Real estate should be where we live, where we spend our lives, where we grow our families, right? And that changed massively. I remember, growing up, like families in Brazil would have a house in the city, a house in the mountains, right? And it wasn't really, you didn't need to be like extremely rich for that, right? And today people can even own their first house, right? So I think the demonetization of real estate is good because of that. We also haven't talked about, there are other assets that are monetized, right? There are equities massively monetized, right? The S&P 500 became the monetization standard of equity in the world. And that's why the S&P trades at the premium of other equity markets, right? Bonds. So bonds are around 100, both equity and bonds are similar. So one is around 150, X around 150 trillion in market cap. And bonds is estimated to be around, another 130 to 150 trillion, right? These two assets are also primed to be demonetized because they were used as savings technology. Because again, you have the doctor works, he produces capital, he has capital sitting in his bank account. He knows that if it just sits there and if it's not invested, it's going to lose value a long time. It also created this other problem that I think everybody talks about it, but it is important to talk, that people that have nothing to do with investing have to start investing, right? So the lawyer, the doctor, the dentist, people that shouldn't be thinking about investing their money, they have to open accounts in Robinhood, they have to open accounts in Charles Schwab, whatever it is, and start investing their money. Because if they just leave it on their checking account, they know, conceptually, they know that, in a decade, 2 decades, that money is going to be worthless. And it's not, they think the money needs to work for them, right? They don't realize that it's actually the opposite, that the money shouldn't work for anybody, right? Money should be the store of value, should be the store of the fruits of your labor, right? The fact that you have to run after to make sure that your money works for you already shows that the system is broken in some sort of way, right? And to your point about Jeff Booth, yeah, absolutely. Technology is extremely deflationary, right? And it begs the question also why we haven't seen deflation and why we continue to see inflation, right? And the answer is very simple: is that it's a money printing. People can press, it's costless to money print. You just press a button and there you are. You're printing money out of thin air, right? While in Bitcoin, I can tell as a miner, right, to print money in Bitcoin, we have to spend a lot of capex in machines, buy a lot of machines, right? And energy as well. It's not free, right? And even in that case, even if I put all the resources of the world into mining more, I won't be able to print more because in 2 weeks the difficulty is going to be adjusted again at the Bitcoin protocol, and the same amount of Bitcoin is going to be coming out, or close through every 2 weeks, right? And a block is still going to be coming out on average around every 10 minutes. So it's a beautiful system if you think about all of these things and how it contrasts with traditional financial system, right? It's much more fair, it's much more ethical, it's much more transparent, and the most important thing of all of these is that it's much more predictable, right? Not being able to predict what's going to happen is really what drives economic agents crazy, because you can't make long-term planning, right?
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.